My name is Witchell Joseph, aka Creative Minds. I'm not a financial advisor, everything just for educational purposes. So for this class, usual, we start off with the creed. Anybody care to read this? April?
Okay. I am a consistent winner. I objectively identify my edges. I predefine my risk on every trade. I completely accept the risk, or I'm willing to scale back. I act on my edges without reservation or hesitation. I continuously monitor my susceptibility to making errors. I pay myself as the market makes money available to me. I never violate these principles of success.
All right. So I just want to, ask what you guys again, like what do you think is your strength and your weakness at this point, April?
I feel like the weakness is like sometimes I feel like I can see some edges, but then I'm not 100% sure.
Okay, so identifying some of the edges.
Yes.
Okay. And your strength?
I feel like my strength is probably I accept the risk. Yeah. Okay. And then sometimes I do scale back. I'll just,
Okay. That's good. That's good. What about you, Ty? Same question.
For me, I think right now I'm working on predefining my risk and making sure that I'm doing that properly.
Okay.
For my strength, I would say, I think accepting my risk or scaling back or paying myself as the market makes money available to me, because I don't have a problem with taking profit.
Oh, nice. Nice. I'm not sure if I asked you, but I remember like in the first class when I was asking people, the most common theme was paying themselves when the market makes money available to me. That was like the most common weakness. And the most common strength was objectively identifying your strengths. So it's interesting. It's just interesting. I noticed some things change. I'm not sure if I asked you back then if you were the one that you might have been one of the people, but you might have not been. So, but I just remember asking like everybody. Good evening, Denise.
Hey, how's it going?
Hey, it's going really well. It was quite a day.
Oh yeah, fun, huh?
I sidelines. I sat on my hands today. I got out of my position and just sat on my hands.
Yeah, I didn't play any real money. I played demo, but it was amazing to see how the range. I was doing futures, futures move quick. Yeah,
I was thinking it was a good day for a spread. That's what I was thinking.
Yeah, I didn't play spread. I played futures because they kind of move with the action. You can actually see the swing.
I want to start playing futures more because you get it per tick. Like if it moves, you get in that move.
Crazy. Yeah, it was interesting to say the least.
Yeah. So we were going over the Trader's Creed, and I was asking everybody like, what is their strength and their weakness? So same question for you.
In trading in general?
Yeah, off the Trader's Creed. Yeah.
Oh, off the Trader's Creed. Oh, yeah. Okay. Okay, what do I do? Okay, so let me see. I'm glad you have it here, so I can actually take a look. All right then. So which one don't I do? I think my biggest weakness is I'm really good at making good buys. I'm terrible at selling. Like I will hold on to a trade too long. I don't pay myself as the market makes money available to me. And sometimes I'll double. I mean, it's embarrassing to say. No, sometimes I will see a double, but it will be early in my option. I'll think, oh, it's just started. It can't be time to take the profit. I just started. Yeah, exactly. And that's because when I started doing options, I did them at a time when options would double, triple, and sometimes even more. And so I got used to these big numbers. And so if the option just doubles, so why don't go higher? And of course, that was unusual when I got in them, that it was doing that. So I got into this bad habit of waiting too long, and then of course it would start to dwindle. So that's my biggest weakness is I'm really good at identifying good trades. I'm terrible at selling on time.
Yeah, like I would say like that was a weakness for mine. I mean, it's probably still is. I just got a lot better at it. But if anything, I'll hesitate to sell, but as soon as it starts going against me, I'll just get rid of it. So it's like for me, what I realized in my mind is that it doesn't make sense for me to be in profit, right? For me to let it get negative and then wait for it to come back into profit. So as soon as you're in profit, my job is to protect my profit.
Exactly. Yeah. Well, I'm learning that now with futures, because with futures, you know, the way the swings go, you could open up a trade, and immediately the trade has like doubled in terms of, you know, pips or ticks or whatever, and you have to sell right away. And if you hold on to it like 3 seconds too long, you could lose everything you just saw as profit instantly, because it'll swing all the way back. And that's what was happening today. You would see profit and it would swing back down immediately. So so I was really getting great practice in selling quickly to gather the profit, to see how much I could actually collect. And that was like, it was almost like a game to see if I could just get in the swing of things, or just taking the profit when you see it and not waiting to see how high it could go. And that,
it's like it's a mentality. Like I have to remember to be a scalper, because if you're a scalper, you're only trying to get a little bit and get out. The faster it comes, the faster you take it. Right. But in that mentality, a scalp can become a trend trade, but a trend trade can never become a scalp. So if you start off thinking short, then maybe it can become longer, but you got to think short first. So just certain things, you know, like one thing I'll do is like, as soon as I'm in any type of profit, I have to sell either a third, a half, something got to go.
Right. Take some off the table. Yeah, that's a very good strategy too. And I learned that with the crypto. The crypto taught me really well how to take money off the table, because the crypto ventures we were involved in were very high risk. And so we'll constantly take my money off the table all along, not knowing when it would all end. And sure enough, it did end, and we all left money on the table. But I do think that my taking money off as we went totally changed my outcomes for that venture. It was a profitable venture where it could have been a disaster. So taking money off the table, I've learned in other ventures. I'm still bad at it with stocks. For some reason, I have this narrative that this thing is going to do this or this thing is going to do that. And one of the things I was reading last night was that the difference between institutions and retail traders is that institutions only trade on what the market is doing right now. They're not saying, well, this is a great stock, this is a great company. In 2 months, it's going to be double or triple what it is now. They're like, no, right now it's up, we're buying. Right now it's down, we're selling. And they don't care about the future prospects, not even 5 minutes in the future. They only care about what it's doing right in that moment. And I thought, well, that was another example of why it's not good.
Yeah, trade what you see, not what you think.
Right, and that's because that's because trading has changed. I remember when I started trading, you would buy and hold. That was the way to trade. Everybody, not even trade, that was the way to invest. Buy and hold, buy and hold. Nobody had a computer to compete against. There were no algorithms. And once the algorithms came into investing, everything changed.
All right. You mind reading some of my rules?
These are your rules? Okay, that's him. Right. So which rules? Trading rules of success. Do not take any trade expecting to win.
Rule number 1. The hardest rule.
Yeah. Expecting to win. Okay. So A, I'm taking this trade based on my strategy, which does not guarantee I will win this trade. B, if this one loses, I will likely win more trades if I just stick to the strategy. C, my strategy typically wins 7 out of 10 times. So I don't know about you, but I think that sounds like you're expecting to win 7 out of 10 times.
Well, it's a strategy. It's based off probability, not off of expectation.
Okay.
So that's the difference.
Okay. So number 2, take only one trade at a time. A, can add more if it's stocks or later expiration date. Example, leaps. 3,
Well, let me just start right here. So like literally, like I had today, I had to sell everything because I broke that rule yesterday. I hopped in so many positions, and now my attention was being stretched. And I was like, no, if there's anything I need to pay attention right now, it got to be one thing so I can execute my best, and that's it.
Ah.
And then I make less mistakes because it's one thing.
Okay.
Mhm.
So you're saying you only have one open trade all the
So,
time at the time?
Unless it's stocks or I have later expiration dates. Later expiration dates, I don't have to put my energy on them as much.
Okay.
But
I
as
get
far
you.
as imminent, it's only one. Like
I
that.
get
Mhm.
Okay. Very good. Okay. Never use more than 20% of entire portfolio. Is that per trade?
So if since I'm doing one trade at one time, I have the option to put 20% on one trade. But that's gonna be it though. You know what I mean?
No, that's a fifth. That's a good chunk.
Yeah, it's a good chunk, but but look at the next rule. Well, yeah, look at the next
Okay.
rule. Mhm.
Do not assume a position will turn around. Close losing positions at less than or negative 20% stop loss.
So I'm risking 20%, but out of that 20%, I'm risking 20% of that. So therefore, I'm risking 5% of the entire portfolio.
Right. I get it. So right. So you still
But if it goes my way, I have more capital to help, you know?
Right. And then always set trailing stop loss.
This one I don't always do. I'm still getting better at setting it. I've done it a couple of times, but I just trail it myself. You know what I mean?
Can I just say personally that the market is very mean. When it sees a stop loss, it looks at it as an easy get, and the price of that stock or option will literally come down, grab your stop loss, and go back up.
Yeah.
And I think it's very manipulated because they're designed to go get all the stop losses.
Like what I like to do, but it's like I subject myself to my own human error when I do it, is just use a mental stop loss. Mental stop loss means as soon as it hits this number, I'm out of there, but I have to be disciplined enough so when I see that number, I don't think, well, maybe like, let me wait. No hesitation. Like I'm out of there. So it's either, and that's the thing, like, because sometimes I don't have the discipline to do it. I just put the stop, you know what I mean? And I like it like that, you know what I mean? Because sometimes I like it out of my control, but meanwhile, I'm still working on myself so I can become that disciplined to always use them, or not always, but mostly use a mental, because I'm mostly scalping throughout the day. So stop loss kind of slows me down, especially when I'm trying to sell, and then I gotta cancel my stop loss order to sell instead of, you know what I mean? I need the versatility to just be able to move around my contracts and sell a bunch, keep a bunch, stop loss a bunch. But if they're all stop loss, then it slows me down from executing.
Well, especially in options, it's really hard to do stop loss in options when the options, they're only going to be $1, $1.50. Where's your stop loss? Because like I said, they swing these options up and down so much.
But the main thing is, that's why what I'm going to talk about today is about entry. If you get your entry right, it's much easier to have a good stop.
I agree with you.
When you're not entering right, your stop is going to be so far and it won't make sense.
No, I think the entry is the key to stop lossing. And that's why entry is everything. And that's one thing I had to learn the hard way, because I would get stopped out on a lot of stuff. So before entering live, first enter on my demo account. Feel free to enter early, but still try to get best priced.
So I use my demo account as a crash test. If I'm feeling emotional, I'll be emotional in my demo. But I'm still trying to make it more realistic, where I actually try my best on my demo, but I don't. But I want to but at least it serves as a buffer between me just feeling like entering right now. Because then when I enter, I gotta wait before I enter in real life.
Yeah, okay. Very good. Have an entry and exit strategy. A, plan all trades before taking them with entry, exit, targets, and stop loss. B, use supply demand zones with support resistance. C, we are planning on staying in trades no more than 5 minutes. This is plenty of time to make 20 to 30% gains, completely removing theta from affecting price. Only exception is if a stock runs straight up or down for the entire 5 minutes, in which you should sell immediately upon resistance.
Scalping.
Yeah. And then A, never worry or panic. My roles ultimately win 7 to 8 out of 10 trades. That's a very high win rate, actually. We should learn about that. That's really good. So why waste valuable time working and stressing over a loss? Yeah, if you have a 7 out of 10 trade rate, you're kind of golden. I mean, even the algorithms, they don't even have that higher rate. That's really, really good.
But the thing is, when I follow my rules, when I don't, it goes down. You know what I mean?
Yeah, well, that would be incentive to follow them because that's a
Yeah.
really, really good rate. I mean, yeah, I can't even argue with you on that one.
Especially number 9. That's what makes it. This is why it can be so high. This is the only way you can have a 7 out of 10 rate right here.
Okay, so only trade A+ setups. This will cause me to take fewer trades per week. Focus on a very few stocks at all times. Yeah, that makes sense. Good entries and only good setups.
Entries and only A+.
Right.
You're gonna win 7 out of 10 because
that means
the
you're
probability is
patient.
in your favor, huh?
Right. That means you're patient. You don't mind waiting for the setup to show up.
Yeah,
Some people don't want to wait.
trades, but if you keep trading, there's no way you're gonna win 7 out of 10 because you keep taking B+,
Exactly.
C+ setups.
I'm with you on that. That's discipline. That's really good discipline right there. Okay, chart on Thinkorswim while the market is open. Must master Thinkorswim and be comfortable and savvy. Would save the time from trading on one screen rather than switching between TradingView and Thinkorswim.
Yep. So I'm trying to get better at charting on Thinkorswim because I love TradingView so much. But if I could just stay on one,
I know. Everybody loves TradingView, but they don't have all the features to trade, right? Yeah.
And
okay.
Number 11, very important.
See profit, take profit. Move on to next play. Have confidence to take that money as soon as I see it to make more money. Instead of thinking, this is it. I'm here to grow my money, not hold my money.
I like the way you read it.
Because I do that all the time. This is it. Oh. Okay.
Yeah, grow my money, not hold my money.
Right. Trade the charts, not the money. Look at the chart while trading and not your play. Not your profit loss own. Yeah, not your P&L. Only glances. You cannot be attached to your money. Okay. Schedule trading times: 8:30 to 10 a.m., 2 to 3 p.m. That's very disciplined. You walk away at 10. That's good.
I go to the gym, so I have no choice.
Oh yeah, that's good. Yeah, that's good because people don't want to move away. They get addicted. Okay, so follow list of few setups and criteria that must be met in order for me to enter any trade. Oh, you have more?
Yeah, these are my entries.
Okay. So you want to read all those too?
I'll read it. You done well. And it's also like black and green. It's probably not the most legible. So entries, it must be super strategic. Always low ball if price is not near lows on the option chart. So the main thing about options that matters the most is how much you pay for it. If you could pay the least amount for it, you have a much higher chance of just it going higher. You know what I mean? So low balling and limit ordering is part of my entries strategy. I'll always let the context develop first to see more of a daily range. So every day you want to see what's the range of whatever you're trading. You know what I mean? Is the range getting smaller as the days go by? Is it getting shorter? Is it trending? Is it shopping? Is it balanced? All that. You got to get your context. And breakout and retest with candle patterns are your strongest entry. When you can get double bottoms or head and shoulders. So focusing on the strongest entries. So the candlestick patterns that I trade are head and shoulders. Oh, can I zoom in? Okay, let me see. Let me see if I can just probably change this.
You can change it 100% to like maybe 125.
All right. Better?
Yeah, it's better.
Yeah.
All right. You guys, everybody can see it?
Yep.
Cool.
Yep.
Yeah, so the candlestick patterns I trade, head and shoulders this is my favorite because when you master head and shoulders, it has about an 80% win rate, the head and shoulders. So why not just trade the head and shoulders only? Some people do that. Besides that, bull and bear flags, we're gonna talk about these. Cup and handle inverse, triangles, we talked about gap fills before. And then take profit strategy. So half of entire contract as soon as I'm in any profit at all. sell at least one contract, and then what I do, keep selling one contract into strength every time the profit ticks up one. So for example, if I bought at 8, it went to 9. I got 10 contracts, sell 5 at 9. Now it goes to 10. I'm gonna sell them 1 at 10. See if it goes to 11, sell 1 at 11. Goes to 12, sell 1 at 12. So it goes to 13. So that's, and then if it don't go up no more, just sell the rest. So that way,
Wait.
does that make sense? Was that
So
too
how about selling half as soon as you're in any profit at all? When
If
you
you're
say
real-
that, it makes it sound like you'll sell if you get 10 cents, you'll sell. Is that true?
$1, because the lease is $1, on the options, you know what I mean?
Well,
So-
no, if you have a $1.50 option, it can go up to $1.60. You're gonna sell?
Yeah.
That okay, so you're saying that in terms of 100 shares, it's gonna be enough money to make it worth your while.
It's like, because if I'm buying 10 shares, right?
Yeah.
I'm sorry, 10
100
contracts.
shares. It's 100
10
shares.
Yeah, every contract controls 100 shares, but the main thing is that I'm multiplying it off the contracts that I buy. So for example, if I buy 10 contracts at $20, right? It goes from 20 to 21. I sell half, I just made $10 profit.
Oh, that's because you had 20 contracts or 10 If you only had
Exactly.
1 or 2 contracts, you wouldn't be making any money.
Yeah.
So I
have multiple
yeah,
contracts.
yeah.
Mhm.
That caveat depends on how much you're working with. If you're working with 10 contracts, yeah, you can afford to sell half when you have like you
Yeah,
said, when you have
but
one.
if you have
But
one, you can't sell half anyway.
well, no, but if you have 2, you can't sell half when you only have
Two.
1. You know what I'm saying?
Mhm. Right.
Sometimes the
But
contracts are expensive. You can't buy 10.
say that again. Is it pricey? Oh, that's why I have a budget. Like my budget is so that I always could buy multiple contracts.
Okay.
If you look at the price that I buy contracts, they're all like under $30.
Okay.
Like
That makes
no, mostly.
Okay. So your strategy goes with other strategies too. Okay.
Yeah, everything's not here, but
Okay.
yeah. Stop loss strategy. Always use trailing stop loss in order to secure maximum profits. Use OCO orders to sell trailing stop loss and target profits orders simultaneously. So by using OCO and using custom orders, we can already set everything like the rule where you have your entry and your exit. You could set it from the moment you enter. So it's very advantageous in a way to automate your trading. All right.
Do you have your trailing stop losses set up ahead of time? Because sometimes you're moving quickly. You don't have time to enter all the details.
So to be honest, most of the times I do not put the trailing stop loss, and I trail it myself. But I want to always use it.
Yeah, I still believe that they use that to stop you out on purpose. I really do.
They do.
Yeah.
But it's like I said, it's all about the entry.
No, I get it.
All right. All right. So let me try to get through the rest of this. All right. So don't trade lists. You need a list. You need to know when you shouldn't be trading and when you should sit on your hands. If the market is choppy, lacks volume, volatility, and momentum in a direction, don't trade. If the Fed is talking and it's non-clear momentum, don't trade. If you're not 100% mentally sound and you're not worried and you're thinking about bothersome things, don't trade. If it's not an A+ setup, don't trade.
All right.
I should get some more things in here to make it more fun, right? But so A+ setup, I need 4 out of 5 confirmations. So confirmation of, these are 5 confirmations I have. So time frame continuity on the monthly, weekly, daily is the same while I'm swinging. If I'm doing an intraday on the 4 hour, 1 hour, 15 minute, all the time frames the same color. Is it green on the monthly, green on the weekly, green on the daily? All right, then I can swing. Does that make sense?
Yep.
If it's green on the 4 hour, green on the 1 hour, green on the 15 minute, all right, then I could trade it intraday. These are indicators I use. I like if my indicators are green, I have more indicators, but I'll just call this indicators. So my ATR, my on balance volume, so I use it, but I use TTM squeeze. So if I get confirmation from my indicator, that's one. You guys know about the EMA cloud flip. I use the EMA. And then I also have moving average crosses.
Okay.
And
That's
then
a lot of stuff. Yeah. That's a
yeah.
strict You have a strict strategy there. That's good. That's why it works. That's why it works.
When I do
You know,
it.
yeah, it's like you have to kiss 100 frogs to get the prince. You probably kiss 1,000, and then you get one prince. Bad analogy. Okay.
I'm like, I get what you're trying to say.
Okay. It just takes longer for you to get the desired,
Right,
the desired cook. Yeah.
So now let's talk about entries. Let's talk about the spot. Let's talk about entries. Let's get into the. So this is the 1 minute chart. You guys probably never see me pull it out, but sometimes you want to look at the 1 minute chart just to look at every single fluctuation that there is. And as you see, this is the day. So this is Monday. So you see Monday, this is when the market gap down, and you see that we were inside of this range. It came down. You can call it a trending day down, even though it was very rangy in the middle of the day. The next day was even more rangy, right? More inside day. And then today, test and retest day, it really came down and it really, went through the opening price and ended up finishing kind of a little bit higher than where it opened. For all this uptrend, it came right back down. But the range did expand, and they're just showing that volatility is expanding. You guys see that right here? Yeah. So it's important to go back and look at the day and look at it in different time frames. So you can even look at it the 5 minute, just to get some more less curvy twists and turns to see where direction was heading more. 15 minutes also really good intraday to get a sense of things. You know what I mean? So you can see how things were moving, throughout the day.
It was choppy. So choppy today.
So choppy and then but a big range, and it's really showing volatility is increasing. Now I'll go to the really big time frames, the hour. You can see, how the market has been moving, from day to day, and then you try to see what range is it in. So right now it's between, ever since it dropped on Monday, it's been between, I'll say 371 and 383. So I have these lines right here. So I have alerts on whenever it breaks this range, then I know maybe I should do something. But until it does, I don't need to do anything.
Well, tomorrow morning it's gonna do something. Don't you think?
I think it'll do something, but I don't know what it's gonna do. So I gotta just be ready to react.
See, you don't have a sense of what the sentiment was after the Fed's talk today.
Let's talk about that, because I do have some slides on that. Thanks for reminding me. So this is today. So anybody else mind reading?
Yeah, I'll read.
Oh, go ahead. Go ahead.
Bullish. Powell isn't as far behind the curve and willing to hike big. Dollar dropped. Bonds kind of moved. Bearish. Powell is in the backseat. Uncertainty increased. Odds of recession increased as we are hiking aggressive into a slowly economic cycle.
So if you look at the day, the time when the market did shoot up is because Powell said that a soft landing is possible, but he also said that it's out of his control, and he basically switched to more of a data dependent mentality. So he's so basically he created uncertainty because he took a back seat. It's like Powell just quit, and he's like, it's not on me. Whatever the data does, we're gonna do. You see what I'm saying?
Yeah, I mean, the price went with that too. It went up and then all the way down when he said that.
So if there's one thing for sure now, there's gonna be a lot of volatility back and forth, up and down. But because it's so much volatility, I can't predict where it's gonna go first.
Right. Yeah.
So I just gotta wait for it to break the range and then attack it. Because if you look at before, right, on the daily, you see right up here, it's just like up here. This you see when SPY went up back on May, the end of May, it was in this range. As soon as it broke this range, that's when I knew to hop in. You see what I'm saying?
Yep.
So
Can
it's
you
this.
repeat that?
So when this price is consolidating in a range, you got to wait for it to break that range, because when it's consolidating, it's balanced. The market is balanced. The market is based. We needed it to be imbalanced. We need one side to be stronger than the other. So we wait for that range to break, and then
Can
we
you-
enter.
Makes
Huh?
sense.
Yeah, can you focus on today's range alone? Like go to like an hourly
Yes.
chart to look at today's range, because it seemed like it never broke out of a range today. Even though it was going up and down, it stayed within a certain range.
Yeah, I had it there before. I don't know if you noticed.
Yeah,
But yeah, so you see
yeah,
today's
it
range.
never, yeah, even though it went crazy, it never broke the range from this morning.
Yeah, I mean, it went a little bit higher, but not really. You know,
Not
like
really.
this morning it went a little bit higher, but it came
It
right
came
back down. It came right back
Yeah.
down, so not really, you know.
Right.
Yeah, so that's what I'm saying. We're gonna wait for it to break the range. So maybe tomorrow it'll gap up and start fill this gap. Maybe, but maybe it'll just come right back down inside of here. So we're gonna wait. And waiting and saving your capital is the number one thing. Because remember, in this game, our job is not to make the money. Our job is to play our setups, which make the money, because our job is to protect the money. By protecting the money, the market will do its job and make us the money. Does that make sense?
Yeah. So what does
So-
that mean for our crash options?
That means, I would wait. I mean, just wait. Right now, like you can do crash options, but you'll have a better assessment if you wait for more context. Like for example, if this starts to come up, if this come up and comes near this line or fills this gap, then I'm gonna think about crash options. I wanted to go back as high as possible before I go into crash options.
I think people already bought crash options because they
You
were
can
instructed to
buy
buy them already.
now. It all depends on how much time you put on it and how much money you have
Yeah.
to spend.
People already have them. Their question is, when should they sell them?
It's really up to your option. It's individual, you know.
No, you're right. It's a tough one.
Because now you got this low. So I would wait for it to start breaking this low and form another low before I think about selling my crash options if I had time on them. But yeah, entry strategy. Yeah, that's what I want to talk about. Hold on, did I finish? Hold on. I don't think I finished.
So you didn't mention journaling on your list of things.
Oh, it is there. If I didn't add it, I'll add it. Yeah, journaling is number one. Because that's the only way for me to know like how am I really doing and what am I going through when I trade emotionally. So it's very important. Yeah. So
Do you journal as you go, or do you journal at the end of the day?
so usually at the end of the day, but I want to start journaling as I go, but it's usually after the fact.
Okay.
Mhm. And then I have the Trader Sync. Remember I showed you guys the online journal. That's keep track of all your trades.
Yeah.
Yeah. So
Yeah.
I use both that in the physical, you know.
Mm-hmm.
So that's the only way to actually improve. Like journaling makes all the difference. If you guys start journaling today, tomorrow, you're gonna start trading better by the end of the week. I promise you guys. Start journaling. If you're not journaling, just start writing about, you know, your mistakes and then how did you feel in the moment, you know, because it's the emotions that make us do things. But so to control them, we got to be aware of them, and we got to see that you're gonna see you keep making the same mistakes over and over again. All right. Anybody mind reading this?
Stocks made these.
Oh, sorry.
Go ahead.
Go ahead, Tisha. I did a lot already.
Okay. Stocks made biggest move up on comment that I do not expect moves of this size to be common. Stocks came down when Powell said soft landing is still possible, but outside of his control, and so are any other future rate rate hike size changes.
Yep. So when he said that he's probably not going to keep doing that 75 basis point moving forward for other months that shouldn't be common, the market relaxed. But once he said it's out of my control, and they're like, oh, uncertainty, let's panic.
Yeah, it was dramatic. It was almost like every question, it was a different response in the market.
And you mind reading this, Denise?
Biggest changes from last meeting. Took out expecting inflation to return to 2% objective to the committee is strongly committed to returning inflation to its 2% objective. Conclusion, volatility is here to stay. Every data point from here on out will be a lot more volatile given the show we got today.
So if another report comes out, inflation's at 9%, market's crashing. Any information that's coming out at this point is going to affect the market so much more. Because Powell said it's about the data. We're going to depend on the data. So the data is going to, run the market now, not Powell.
Yeah, well, that's good. So I guess we can make volatility work for us, right?
Yeah. So it's like, look at certain things, plays right now of things that have been beaten up that might swing crazy when volatility is up. So like one that I'm looking at is utilities. Let me show you guys. XLU. Like moving forward, you might be able to take advantage of volatility from things that have been really beaten down. Like look at utilities. Goodness gracious, right? You know what I mean? Big head and shoulders. You see that? I see the head and shoulders. So you could have played this easily. And this is why head and shoulders be working. Because when it goes, it goes. You see the yellow neckline? Broke that. That's easy. Yeah. I couldn't play it, but I'm playing so many things. But that's why I gotta focus on less. You know what I mean?
Yeah.
But it was already a great entry, great trade, and everything. So now that is here, I'm trying to see like where does it find support? Is it finding support? And then maybe like because basically when things go down a lot, they have more potential to go up. When things go up a lot, they have more potential to go down. You know what I mean?
Right. So when so you're buying options on this, right?
Yeah. Specifically PCG. Let me show you the option real quick, and that'll be the last thing. And also show entries. I didn't cover everything today, but PCG. All right, let me show my screen. Last thing. So these are LEAP options expiring January next year. Calls. Right, this one. Yeah, $15 call. It's like $33. So I'm gonna slowly maybe buy one contract, but slowly end it. And that's it for today, guys. So
okay,
see you guys
great.
on Monday.
Thanks a lot. Can I ask you one last question though?
If you can't fit it in before it cuts off.
There's so many oops. I guess I couldn't. Bye.
Bye.